when you have the freedom to invest where you want to, especially when you're running your own business, you want to reinvest maybe back into your own business, or I'm going to talk about it when you want to invest away from the market. And let's say we want to get into these life settlements. You should have that choice to be able to do that. Now, I know we can do that before, but I just mean that's the beauty of running your own business. That's the beauty of running your own investments. And this just gives you more freedom. The capitalist system is about freedom. It's about choice, and it's about holding on to as much money as you can. That's the key.
Hello, everybody, and welcome back to another episode of Truly Diversified. We are here again with one of our special guests, Jim Yostrum. He was on a previous episode. I highly recommend you go back and listen to that. Jim is a CPA, but more than a CPA, he also offers financial advising to his client base, works with a lot of self-employed people, business owners, and has worked with our company off and on for a long time, referring people to life settlements, as you know what this show is about, and alternative investments. He is a CPA, but that sees the big picture of being truly diversified, that it's not just about the market or dealing with an annuity, but it's also about looking outside to those kind of other investments that are out there. He saw what we had to offer several years ago and has now kind of, referred a lot of his client base to us, and it's been a nice relationship. But the reason that I have Jim on today is beyond just, talking about alternative investments and why it works for his client base. But as we know, a few months ago, the big, beautiful bill, as they call it, love the alliteration, was out there and got done. And I'm a person who works in money, and I'm a professional in this, and I'm confused. And so depending on what side of the political coin you're on, you've been fed information that it could be the greatest bill of all time. It could be the worst bill of all time. And as you know on the show, we're not political. We don't care about politics here. We only care about politics when it affects your bottom line here, but we don't care about the politics. And really what we're talking about is the Trump or anti-Trump stuff. And I have no opinion either way, because it's all about whatever's put in front of us is how do you make money, right? The politicians can decide what to do. So Jim, talk to us about this, kind of clear the air. The reason I wanted you on a couple months after it came in is because, there can be a lot of misinformation out there with the bill. It's kind of broad strokes. I know you as a CPA and as a tax expert got a hold of this thing as best as you can. Sometimes these bills are thousands of pages long, but, now what happens is someone like you comes in and kind of picks through it and is able to see, what do you really have here, right? That we've all heard the stuff on TV about what it is. You now know what it really is. So talk about this overall. What is the big, beautiful bill? If you were to sum it up to somebody, in an elevator to start, and then let's start talking about the pros and cons.
Okay, great. Well, similar to you, Ben, I'm the same thing. This is, I'm going to say apolitical. I'm looking at it strictly from how it's going to impact the taxpayer, my clients, so on. And what I will say is I'm very much in favor of this bill, because I look at it any time that the government can reduce taxes and do some simplification, it's worthwhile. So the first thing I'll say is I think it's a good bill. I think it's there was a lot of rhetoric out there, and we'll just try to cut through that rhetoric. So, and we're going to concentrate, what I'd like to do is concentrate on how it affects individuals and businesses, directly. So we'll focus on that. As far as, the other things like Medicare, Medicaid, and all that, we're going to set that aside, because that's not what 99% of individuals are concerned about, especially in this audience. So the first thing that I'll say about the bill is, which I think was the basics of it, is that it codified the 2017, we'll say Trump Tax Act, because that act that was passed, remember we had 8 years, and those those changes in that tax act that we became used to were going to sunset, meaning they were going to end at the end of December 31st, 2025. Now, what does that mean? What would that have meant to the taxpayer? That would have meant we would have seen the tax rate rise back to what they were previous. Previously, we had standard exemptions and we had the standard deductions. Those went away. That was put into one standard deduction, and they were increased for individuals and for married couples and for head of households. So they are now permanent. The 20% automatic write-off for any for S corporations and for LLCs and for Schedule C reporting entities, that was extended, and that's permanent now. So that would have gone away without that. Now that's big because that was meant, that 20%, that was meant to equalize what the benefit to the C corporations were getting in tax reduction. So that's huge. And so that means for every, what we'll say for S corporation that files, or an LLC that files, or a partnership, or what we'll say a sole proprietorship that files on a Schedule C, they get an automatic 20% deduction off of their off of the income. So if they made $100,000, they're getting an additional 20% that is deducted on the top line on their 1040. So that is permanent. So that was one of the best things that occurred, along with the fact that they kept the lower rates. Now, what was added, which I really like, and there was a lot of publicity about them, is we're going to talk about they've added no tax on, and we're going to talk about the positives, negatives on this. No tax on overtime.
Got it. Yes.
There's tax on where we'll break that down. And the first thing I want to say is what we talk about from here on in, those are not permanent. They're from 2000 effective in 25. They sunset in 2028, so December 31st. So this is for 4 years. Now, the overtime is just no tax on overtime for the overtime premium. So, we know that if you work overtime, you get paid time and a half. So that half time is not taxable.
Okay.
And that's up to $25,000 exclusion. But after that, and then there's income limits. We won't get to. I don't want to get too.
Let me just stop in as a person who's listening to what you're saying, because I find that very interesting. That's something I did not know, and I'm going to guess 99% of our base does not know. I want to clarify what you just said is on overtime. I think people thought, okay, I've worked my 8 hours, now I'm in 9 hours. So let's say you made $30 an hour, now you're making 45 on that 9th hour, right, Jim? I think a lot of people thought that meant that the full $45 is tax-free. You're saying no, what it is the $30 that you made per hour is still taxable. That $15 in that overtime where you got paid time, it's the half, not the time, it's the actual half. You won't get dinged on the $15 extra you're making per that hour. That's very interesting. Am I hearing that correctly?
That is correct. And people throw around terms, and that's what we're going to talk about in the next two items too, because it gets thrown out there and exactly. I mean, that's the way I thought at first too. And then,
right. So if you're somebody who's making overtime, you're like, I'm making a killing, man. I want to work 20 hours a day because this is free money. Well, no, you're still taxed on the money that you would have made per hour. That extra bonus half time is going to be tax free, right? So it's still a great deal, but it's just, I think people need to realize, I think a lot of people who aren't working overtime think this is BS. These people are making, you know what I mean? But the issue is, it's not really BS. There's taxes coming out of that hour, just as it was in the hour before. Why should, and I like it. I think that's a great deal. Why should they get taxed on that extra money they're making on the hourly rate, it's the same tax rate they were making on hour 8. How come if it's an hour 9, the tax rate actually, tax amount becomes more? They're just getting a tax reduction percentage wise on the money they're making in that hour, right?
Yeah, and people sacrifice. We all know that. If you work 10, 12 hours a day and you're working those extra time, yeah, you deserve that premium. That's what it's there for. And I like the fact, I really like that. I like the fact they get the overtime or the halftime non-taxable. I think it's great. Same thing with, we'll talk about on the no taxes on tips. Again, that's a great one. There is no tax, but there are income limitations. So you've got $25,000, I believe, the no taxes on tips. So, and then, and it doesn't matter whether you're a 1099 or whether you're a W-2 employee, the no taxes on tips, but it's limited to the first $25,000. So it's not, if you're making 80, some of the servers are amazing. I'll relate a quick story. My son was working in the restaurant industry and he was a manager and he was making pretty good money. And some of his servers were working 4 hours or 4 days a week. They really made very good money. So this is going to help them, which again, I applaud that. The more people can take home in their pockets, I think the better off. And then the last major piece of the legislation that they put through that I'll say is really going to help individuals was, again, and it's a little bit of a misnomer, the no tax on Social Security.
Okay, we cover a lot of content on here, and I'm always asked this important question: where do I start? What is a good first step? Well, if you're looking for a way to diversify your retirement away from market volatility and still get competitive returns, I want you to watch this free on-demand training. In under 30 minutes, I will walk you through the exact strategy that smart and wealthy investors like Warren Buffett have used for decades, and they do it by investing in what's called life settlements. We'll break down how this works, real case studies, and how you can add this market-independent asset class to your portfolio without having to lock it up for 10 to 15 years in some low-performing annuity. You will learn how to build stable, predictable growth and, yes, get true diversification, especially in today's uncertain environment. All you have to do is go to lifeassetllc.com/webinar. Again, that is lifeassetllc.com/webinar, or you can click on the link below here and watch it now. It is completely free, and I think you'll find it will be a game changer on how you think about investing for your retirement. Okay, now let's get back to the show.
What happened on that, and I'm again not getting political here, but what they did is they couldn't to change the law. And I don't understand all the politics on it, and I don't want to get into it. But because they couldn't get a 60 vote majority in the Senate, they couldn't change the nature of the Social Security payments. So what they did is they said, okay, we can't do that. What they did is for those that are over 65, a married couple that both are over 65, you will now get an additional $12,000 standard deduction or added to your $32,000 that's this year. So for 2025. So you can get your Social Security, and then so that'll mean you'll have a $44,000 standard deduction, not the 32. If you're single and you're receiving it, or if you're married and you're the only one receiving it over 65, you'll get a $6,000 additional standard deduction. Now, is that no tax on Social Security? No. Does it take the bulk of the taxes on your Social Security? Most likely, yes. So while they run a little loose with the facts, overall, it's a good benefit. I mean, this is a great benefit.
It's very similar. It's very similar. You're saying about the tips, right? Or the overtime and that's why you're on here. Is we know it's never black and white, right? And so you're clarifying there's a middle ground here, and it has the benefits. It's the same thing that I just did a podcast, and you can talk about this for a second too, about how 401ks are now going to be able to get into private equity and invest also in stuff like what we do, right? And my angle there was, you can sit here and wonder why Trump is doing it. And if you're a Trump hater, go, well, this must just be something that he's doing because probably his cronies own hedge funds and da-da-da-da-da. And you know what, Jim? That may be 100% true. No, it could be 100% true. But as you sitting at home, if you have a 401k, who cares? Who cares? It's still a benefit to you. I don't care why Trump is doing it for his own situation. It's probably not for the good of you. Maybe it is, but what's behind it for him, I don't care if the end result is that you now get the benefits. And that's what this is about, right? That's why you're on here, is that who cares about why he wants it? Who cares about why certain Democrats don't want it? At the end of the day, does the end result benefit Joe Sixpack at home listening to us right now going, okay, now I get it?
And and you want that because the opportunity and what you bring up is great. There's so much more into this bill. And one of that, I'm glad you brought that up because, when you have the freedom to invest where you want to, especially when you're running your own business, you want to reinvest maybe back into your own business, or I'm going to talk about it when you want to invest away from the market. And let's say we want to get into these life settlements. I mean, you should have that choice to be able to do that. Now, I know we can do that before, but I just mean that's the beauty of running your own business. That's the beauty of running your own investments. And this just gives you more freedom. The capitalist system is about freedom. It's about choice, and it's about holding on to as much money as you can. I mean, that's the key.
Right. Okay. Well, Jim, thank you so much. Now, the big point there was remind people, I don't think people understand sunsetting, and we'll kind of finish it off here with that is, so this big, beautiful bill, is there a sunset on that, on it as a whole, or are there portions? Because like you mentioned, some of it could go away in 2028. It doesn't mean it's going to go away, just like this with Trump and the last deal. You said 2017. It'll just come up. They'll have to put in a new bill to replace the old bill, essentially, right?
Yeah. When they come through with these major legislations, what they try to do is this, they get it, they take it as far as they can. And there's lots of compromises. And we know Washington, as you very eloquently stated, Washington is very much polarized, just like the country is. So they put this through for 4 years. Most likely, whoever gets elected in the next, as the next president, they'll have to address this, because what will happen is no one wants to say they raised taxes. And just like in this last one from 17, they had it 8 years. When they call a sunset, it just means that the law was temporary. And what they state in that law is, after December 31st, in this case, 2025, all rates, and we're going to revert back to the previous tax law. So it's going to be the same thing here. December 31st, 2028, they will sunset, they will stop. If nothing is done legislatively on January 1st, 29, all rates will refer back to the previous one.
And then whoever's in power at that point will get the pressure of, so you want to raise taxes. So it's kind of leverage there. It's good for the taxpayer at home that if they don't continue something in this fashion, what it means is the people who are on Capitol Hill, whether it's your senator or your congressman or congresswoman or the president, he or she, whoever it may be, will have to deal with the public saying, well, then you're essentially making taxes go up. Correct?
That's exactly. And then one last thing I'd like to say before we get off is, because of the major changes of this bill, I don't often, put out an advertisement. I would say is, and I'm not saying it for me, I'm saying I would recommend that anyone when most people will be affected by this bill, seek out competent tax counsel so that you could take maximum advantage of these changes, because 4 years is not a long time, but but if you can understand them and you don't want to miss out, we're already 8 months into the year here, 9 months, so I guess 8 months into the year. So the reality is, take advantage of this economically, because this is very favorable to the individual and to businesses.
Well, and I agree there. And Jim, that's why we have you on the show, because you are the person that I recommend people go to, because you have done your research. You will find out the answers. And so anybody who's at home, you know how to reach us on our show. We have our links in our notes for the podcast, or if you're seeing it on YouTube, and that's lifeassetllc.com. But we also have all of our information. And if you want to reach out to talk to Jim personally, he's more than happy to sit down with you, and we would pass your information along to him. So hopefully that has been a value for you at home today, at least getting information on how this works with the big, beautiful bill being in place. And Jim is there to help you with that. Trust me, we have sent a lot of people his way, because he's a trusted CPA with us, gives people, his time, not only with the tax situations, but also some recommendations on investments as well. So Jim, thank you again joining us as well. I'm sure we'll have you back on probably in a month or two to talk about whatever else is out there. It's a busy world. So thank you so much. I appreciate it.
All right. Thank you, Ben. Have a great day.
All right, everybody. Thank you so much for joining Truly Diversified, and we will see you next time. Thank you so much.